It's not just villa versus villa competition, it's villa versus hotel competition. Any mature market you work in, data is the first call. The data is not going to give you the answer necessarily, like this is exactly what you need to do, but it's going to give you the context. There is a significant sort of amount of properties that will never come to fruition. The supply numbers will actually come down. The fundamental driver of this market is tourism.
Because ROI is developers use quite a creative process.
Yeah, it's a bit of black magic there.
If you had $300,000 right now, cash, what would you buy? Okay, so Bali Business Club, I'm here with Tom from REID, yeah?
Yes.
Did I pronounce it right?
REID. It's easier with just the letters.
So you, what is it you actually do? What does it stand for?
Sure.
Explain it.
Yeah, well, REID stands for Real Estate Indonesia, or Real Estate Information also. It's a bit of a play on acronyms. And basically we are Bali and Indonesia's only centralised real estate database. So we aggregate a variety of sources to create a platform to provide market insights, information to the professionals with the industry so that investors, developers, agents, buyers can make more informed decisions and add a little bit more transparency and information to the real estate market.
Data-driven insights about the property market in Bali and Indonesia, yeah?
Exactly.
Okay, and how long have you been doing this?
So we've actually been doing it for a few years. We started back in 2022.
Okay.
We only started publishing sort of insights around the start of 2023. We took a long time to actually validate that the information was legitimate and verified.
Is it legitimate and verified?
It is, it is. And we're very open with the information. So we publish a lot of free reports, a lot of free market information.
I love your reports. I take them and
thank you.
Use them all the time.
That's great. Well, that's kind of, one of our key sort of tenets is access to information. We don't want to gatekeep information, but we understand that trust is a big thing within the market. So we publish our information quite freely. So that way, if you do have questions or if you do want to verify it through your own portfolio or own market knowledge, it's there for you to, I guess, test out or try before you buy. If you want to get a little bit deeper.
Who's using these reports and what are they actually using them for? Yeah,
so a lot of our clients, on the sort of paid side of the services, it's definitely agents, developers, some individuals who want to be a little bit more in the know. But in terms of like our free reports, a lot of our content that we publish, it's a really broad spectrum. It's everything from individuals in the market who are just looking to understand Bali better through to new investors, people with existing properties.
But like typically, so say it would be like a developer wanting market research on Ungasan, about a 20 unit kind of apartment complex. Is it viable? Yeah. And then they can extract market data around that to see if it's positioned well, etc. Like what kind of metrics would they typically be getting? Yeah,
so they might want to verify, what their unit mix is, what's actually available in the market, what their competition might be, what the sort of property positioning might be. So size-wise, making sure their pricing strategy is actually in line and how they can sort of position their pricing strategy. I think one of the things that we always say to our clients is, the data is not going to give you the answer necessarily, like this is exactly what you need to do, but it's going to give you the context that you can surround, your strategy with to actually sort of validate that strategy and give it that backup. So you add, your brand value, your USP, all that on top of, a baseline of data. It just sort of helps build a stronger case.
So sort of like, I presume, your pricing brands, your per square meter selling price, your
availability.
Okay.
We also do.
How much is on the market in that specific 1 bedroom, whatever, how many squares, etc.
Exactly. So you can actually really position where your asset is. It's not just the brand positioning or the product positioning. It's actually what context does that sit within the market, and we also provide rental data as well, which a lot of that we license because there are multiple suppliers of
what do you mean,
data.
like rental data?
So that's actual performance. So what is currently available for rent in the market, daily rates, occupancy, revenue, things like that, so that you can actually, again, put your projections up against real data.
Yeah, because ROI is, developers use
it's
quite a creative process.
Yeah, it's a bit of black magic there.
Okay. So you can actually back that up with like real statistics, and that's interesting.
Exactly. And as I said, it just gives you that context and that baseline to work off. and then just gives you a really solid foundation. And I think if you look at most all mature markets, my background, my co-founder's background, we come from commercial real estate. Any mature market you work in, data is the first call. It's the first port of call, and then you go from there.
So today we're going to be talking about a little bit of 2025, or the trends, what happened in 2025, and then what's going to happen in 2026, yeah?
What may happen?
I don't know. You seem to have all the answers. I think it's what is going to happen in 2026. Okay, we're back with Tom from REID, and today we're talking about property statistics, property data, Bali, Indonesia, and then 2025, 2026. So 2025, sum the year up in a nutshell. What happened? What did you see and what was surprising?
I think 2025 was a little bit of a consolidation of the last few years. Sort of out of 2022, there was a lot of rapid growth within the market. I think 2025, definitely a softening was happening, but I think there's nuance to what that softening sort of actually means.
I'm sure there's hotspots to that softening and all kinds of little nuances going on.
Yeah, I think some of the big key trends we sort of saw was overall, as a market, prices softened, but when you actually break that down across segments and categories, there was actually some really positive growth in some areas, and there was a couple of key sort of segments that actually probably had a bit of an outweighed impact on that market, and also the market composition, what the market actually looks like in terms of different bedroom asset categories. That's really starting to reshape the Bali market, which is a good thing, I guess, from our perspective. It signals maturity, it signals diversity. So I think it's catering to a wider audience, which is good. Sales volume is consistent with previous years, so there's not so much a shrinkage of the market. It's more coming into, I think, a bit of a stabilization cycle.
So no major plot twists, nothing extraordinary. We kind of all were presuming that there was going to be a slight softening of the market, but nothing extraordinary happened this year.
Look, I think one thing I think we found a bit surprising was the resilience of the market. Over the last few years, sort of the driving force of the market fundamentally is short-term rentals. So it's a tourism-driven market. And that's obviously been on the rebound for the last few years. So it's seen really great uptick in numbers. This year has actually performed better than sort of pre-COVID years in terms of growth. So it's actually showing how resilient this market is, and actually the growth, I guess, still in this market. It's just a balancing of, I guess, the development side versus the operational side. But that actual resilience or continual growth is a really good indicator for the market.
All right, I took a look at your Q3 report. It obviously backed up what you're saying about the market stabilization. I see off-plan is back up to 38%, median prices holding around 300,000.
Yep.
And the list to sold gap is narrowing. Where is the market actually sitting right now? Like if you had to, look at those factors.
Yeah, so I think it's really come into, growth, especially in new projects, has really quietened down. So the introduction of new projects is sort of flattening or plateauing.
New projects as in off-plan?
Off-plan, or just an influx of new development, new builds, but also, I guess, resale as well. I think a lot of people have bought into the market over the last couple of years. That sort of secondary sale is, it's a relatively quiet or sort of very small part of the market. And so people obviously now holding their assets, trying to rent them out, take advantage of that upside in the arrivals, in the operational part of the market. So we can actually see that from the supply side, those numbers are actually declining a little bit. And there's a couple of reasons for that. As I said initially, not as many new projects, but also there has that 38% of the market that is off plan. A proportion of that market has been off plan or proposed for quite a long time. So an off-plan project doesn't necessarily mean it's under construction. So it could just be sitting on the market, proposed to be developed. And we have obviously been tracking that over the last few years, and we can see a kind of a significant portion of that 38%, around 20% of it, has been in that same position for over 18 months. So that signals it's a bit of a red flag.
38% is off plan. Of that 38%, 20% is just not doing anything. It's just on the market.
It has not sort of progressed in its construction.
And progression is an 18-month indicator.
Yeah, we've sort of taken a nominal, like what would be a nominal, reasonable period to sell, and also for it to actually, progress, for it to be kind of completed.
20% isn't selling, really.
Not selling, and also just not being built.
Not enough capital to,
Unfortunately, I think one of the nuances with this market is that the barrier to entry to sort of introduce a project is really low. You don't need bank guarantees.
You don't need land, actually.
Or
some renders
you could almost just have a deposit on land, to be honest. You could have an LOI or an MOU on land, and pending.
You've got a notary issue. Possibly.
But still, that barrier is quite
super
low.
Yeah.
So, you can put something up and say, hey, villa's coming, apartment's coming, whatever the case might be. There's nothing to guarantee it will actually ever be delivered. And a lot of the time it is relying on the sale to actually fund the build.
99% of it.
Yeah. So if they're not moving,
you're
not building. So what we can see there is a significant, not an insignificant amount, but a significant sort of amount of properties that will never come to fruition. And so when you start to actually, eventually they're going to start cycling out, and we'll actually start taking them out of our numbers, because we're like, okay, physically we can see they're not getting built. From the records, we can see they're not moving. We'll start filtering them out of what is available within the market. So you see that sort of idea of the supply or the supply growth coming down a little bit. And I think that's something that always people should factor in when they look at supply or oversupply or development within the market. Just register that, close to 40% of the market is off plan. And it's reasonable to assume that not all of that will be built.
Well, I wonder what happens if the third buyer on a project that doesn't, ever happen.
But look, you do hear stories of
horror stories.
Yeah, people put down deposit and never eventuates, or that's, I guess, the risk and the reward of this market.
So it's a risk you take.
And it's a way for a lot of people to enter the market, because obviously foreigners here can't take a mortgage, can't take a loan. So, they've got to sort of come in cash up front. If you don't necessarily have that cash for an available property, oftentimes a off-plan property will give you that payment plan that gives you a bit of time to generate, the
closest thing to a kind of debt facility, mortgage facility that there is on the island. Yeah.
Exactly.
And there are, some developers are doing like 5-year plans now and stuff. So it's looking more and more, the more competitive it gets, the more interesting it gets for buyers.
Exactly.
In the off-plan space.
Yeah. Well, we're seeing a few more developers provide terms even post-construction. It's not just
3, 4, 5, 6 years now, I see. Yeah.
Exactly. And I think they realise, vendor financing is a good way of getting people in. So
for sure.
Obviously they're on the bigger end of the developer spectrum. Some of the smaller boutique firms can't offer those terms.
Okay, I see occupancy is up 65% or something across the island.
Yeah, it's hovering sort of, around 60%,
But I see revenue is down.
Yep. Basically, more people coming, but more villas to occupy. The villas are finding or taking advantage of that increased demand or the increase of arrivals. However, they're spread across more villas now. And so to attract those new arrivals, a lot of villas are dropping their prices. And in some cases quite significantly, but also hotels are doing the same thing. We're seeing that, there is pricing competition to capture that market, because there's only so many tourists to go around. And it's not just, villa versus villa competition. It's villa versus hotel competition. And so...
I wanted to touch on that,
So, there's... Occupancy is good to see like how it's performing and how attractive it is, but then, you've got to adjust your pricing strategy to make sure you can keep your occupancy, you can keep people sort of coming through. So we're just seeing more and more competition in that space. And yeah, I think revenue has sort of taken a hit from that. And you've also got to remember, it's not just the new projects that are sort of coming to market. You know, all the old projects that have been around for 10, 15, 20 years, they're like, well, hang on, we're not trying to lose our occupancy either. Yeah. So you're seeing a lot of competition in the market right now.
Sure. Let's talk about like areas, because I see Canggu, Sese, Kudungu. And this was surprising to me. It's starting to pull away from down south. Explain that, because that was quite a surprise. As far as market share.
Traditionally, you know, what we classify as North Badung, so that's kind of looking at your Canggu, Barawa sort of pocket. We sort of break down Badung into multiple sub-markets because it's just too broad. Yeah. So that North Badung market has traditionally been, or I guess in, you know, this investment development cycle that Bali has gone through over the last 10, 15 years, that's traditionally been the epicenter. You know, it's essentially kind of started with Canggu and sort of grew from there. And that really has, you know, the proven track record over that period of time. In the last few years, we have seen Uluwatu, Bingen, basically markets down in Bukit or South Badung, as we classify it, have come up and gained popularity because it obviously does have a lot to offer. And that has attracted a lot of developers, a lot of investors. The issue there is the development of infrastructure and amenities is still a long way behind Seminyak, Canggu, like these areas, even where we are in Pereiranan. You can see that Pereiranan only really starting to flesh out now. Mm-hmm. And so...
We actually did a podcast on that. It says, Uluwatu, why we'll never invest there. It's worth taking a look. That's obviously not your opinion, but yeah.
Yeah. It's still got a long way to go to actually sort of flesh out a lot of those. And I think, you know, what we've seen is in Canggu, you kind of had this epicenter that it kind of grew out from sort of a singular point. Whereas in Bukit, you've kind of seen these little pockets all pop up. It's sort of boomed across a bit more of a broader area. So that means the infrastructure...
In Bukit, it's a broader area.
Yeah. So that means the infrastructure and the amenities, they've got like bigger gaps to fill, basically, to service.
Well, I mean, I was down there a couple of weeks ago. It's for sure, looks like there's a hell of a lot of activity, like construction activity going on. Yeah. I was quite surprised at that stat.
I think the other thing is that, you know, as you said, there's a lot of construction activity. And if you look at South Badung specifically, its off-plan ratio is closer to sort of 50, 55%.
Okay.
So the majority of that, you know, down there
is
off-plan projects.
Yeah, I've noticed that.
Again, if you're sort of looking at, you know, North and South Badung, comparing them, but North Badung is closer to sort of 30% off-plan. So you actually have more options in terms of available properties, maybe properties with track records, in an area that, as I said, has got a proven history of rentals, but also has all of the amenities, has a bit more of a brand name.
Track record,
association, you know. We living on the island, we know everything about Bingen. It's very well known to us. Tourists coming in who may become... It's their first time coming, maybe come once every couple of years. It's like, oh, I hadn't heard of Bingen before. What is that?
Seminyak, Canggu,
Yeah, so it takes a while for that to filter into what is driving the market. Yeah, and so that's where, you know, I think that sort of push and pull with those two locations.
Some disparity,
sort of happens. I do think we actually see that oscillate a little bit between those two markets. I don't think it's sort of like a decline for that area. I would say it's more just an ebb and flow. These essentially now are the two growth centres of the market.
Sure. Absolutely. Okay. And then tell me, that was another stat I read. It was 87% villas, 13% apartments.
Yeah.
And that's holding pretty stable.
Currently, it is. But apartments have been through a huge growth.
Yeah, that's what I would have thought.
Yeah.
But 2025 was stable to 2024, or was that a big...
Still growth. So from, you know, year on year, it moved from about, you know, 10% or just below 10% to where it sits now.
Okay, so it's 3 or 4% shift a year. Okay.
Which relatively is like a 30% growth. You know, relative to what it was, it's still a significant bump in stock. And when you look at that over sort of like a 2-3 year period, apartment supply used to sit, sub 5%. So now for it to be sitting around that 13% number is
so it's just a trend towards higher density, smaller apartment kind of model, which you see in off-plan everywhere.
Exactly. I think generally, there was a few things that promoted that movement. I think first of all, developers want to extract more value out of the land. I think bigger, more established developers came into the market with deeper pockets. So, doing an apartment project versus doing, say, 5 villas, very different capital requirements, very different sort of capability requirements. But also people understanding that, okay, this growth in 1-2 bedroom assets, that seems to be a real upside. There's a lot of investors wanting to come in and say, I'd like to get into the market. The price point might be a little bit off for them. Apartment sort of answers that question. Whether the market from the operational sort of, tourist side want apartments, I think that question is
still to be seen.
Yeah, TBC.
Yeah, because just traditionally everybody wants a villa in Bali. Yeah.
It's kind of what traditionally you came for, right?
But then again, Europeans and Australians know apartment living.
But that's what they're coming from.
Yeah, but it's not like it's an unusual thing for them.
It's not a foreign concept.
Yeah, exactly.
Yeah.
So, it's going to be an interesting thing to see. Anyway, we said that last year. We said 2025, we'll see all the stock come online. We'll see everything happen.
Yeah. It
hasn't really shifted. I think we probably had this conversation a year ago. Saying 2025 was, there's just so many units going to come on. And all these apartments nobody's going to want to stay in. But it seems to have come to fruition and it hasn't really made a big dent.
I think the bulk of the stock is yet to hit the market still. Yeah. So I would say mid to late next year is when you'll really see it. I think the issue then will be also, and I sort of touched on this before, was, the relationship between villas and hotels in terms of competition is close. It's much closer apartments to hotels. They're almost like a direct correlation. Yeah. So, hotel groups and hotel brands are not just going to sit
not
by.
rolling over.
Yeah.
I mean, there's all this Airbnb banning and all this talk. And they're not going to roll over because this is taking a big chunk out of their revenue.
Exactly. So,
and they're discounting. I see a lot of hotels discounting, big discounts.
Yep.
Kuta, Seminyak, and that means that they're feeling the pinch and they're going to blame apartments.
Yeah.
Off-plan apartments.
Yeah. Most of those companies are going to have deeper pockets and they're going to have a more of a long-term outlook, as opposed to maybe the new investor who came in, they're like, they grabbed an apartment for 160K or something. So I think that will be quite an interesting sort of 12 to 18 months as we see what happens there. I think the issue might be that where these apartments have been advertised, they've been compared to hotels. If we look at the actual traditional or the historic performance of apartments in the market, granted, it's a lot older stock. It's a very different sort of model. They don't perform anywhere near a hotel performance. Occupancy is good, but it's almost guest house type rates. So that gap in revenue could be something to get found out.
I think people either want to stay at like they're hotel people and they like the service and they want to stay in a hotel. And I get it. Hotels is easy. Or
absolutely,
they want a villa and they don't mind doing a little bit of the shopping themselves or, that kind of thing. But, if you want to do a villa, but it looks like a hotel, it's a bit of you're kind of stuck in between there,
It's going to come down to the brand and the experience of those assets. Because when you go to a hotel, you kind of know what you're getting, right? You know the service level, you know all of the included amenities. You have the brand reputation that goes with it. In an apartment, you don't necessarily have that, but you don't necessarily have the upside of the privacy of a villa or the flexibility.
Or the service of a hotel.
That might be a bit of a gap that needs to be filled out, which, some of the best hotel operators and professionals live on this island, so it's not too far of a leap to say, we can actually polish this apartment up and actually introduce some of that experience and sort of management as well. it's potentially an opportunity in the market.
So your prediction for oversupply 2026, how do you see it? Is there an oversupply?
I wouldn't say there is an oversupply. Kind of going back to what we were talking about with off-plan projects, when we see the sort of supply numbers, which kind of hover around, let's say, 12 to 13,000, it can look like a lot, but in reality, you know, it's less than that. I think with the slowdown a little bit, or the softening of some new projects, as I said before, I think the supply numbers will actually come down. And it's a bit of a consolidation. We can already see some of the big developers already sort of planning some big projects that will come to market sort of, or be delivered sort of 3, 4, 5 years down the track. Mm-hmm. And I think you will start to see more established developers in the market. The boutique developer operation, those that have been successful, I think will continue their sort of smaller sites. Mm-hmm. Those that have come in and maybe not found the same success, I think you might start to see drop off a little bit, maybe some people picking up some distressed assets or finishing uncompleted projects. I would say that we don't really see this rapid growth coming back. I think we've gone through that period of expansion. We're now in a bit of a period of consolidation and stabilization. In terms of, you know, this oversupply, you know, fear or concern, I think if you look at the scale of Bali, it's really concentrated very much in one portion of the island.
Yeah, I mean, I get that a lot. Everybody's like, oh, Bali's too crowded. I'm like, drive 10 minutes in that direction.
Yeah, and so I would kind of maybe focus less on oversupply and sort of more on enhancing what exists rather than kind of going and finding these fringe markets. Because so many of these, what you would call the core, or, you know, what I've sort of said with the epicenters already, they haven't really been fully realised. So, you know, you can even drive through Canggu and there's still
empty land.
Empty land. It's not that hard to see empty plots. Yes, obviously, people are pricing them at kind of ridiculous levels, but it's not from a lack of supply. It's more just, you know, developers or investors coming in being like, okay, well, it's cheaper for me to go and buy in, you know, Medewi. And it's like, all right, but that's not going to have the same market that Canggu has. So
the volume, the footfall. So talking about mispricing, is there anything that you see mispriced in a sector, you know, whether it's ultra luxury or apartments or villas? Is there a correction that's happening that in a specific sector that you see is an opportunity lies, you know?
Yeah, I think there's probably a couple of areas. An interesting one is definitely apartments. I think they have a couple of interesting factors. The first is we've seen not a big dip, like a dip in their prices. We would say less so to do with loss of value and more so from the fact that it's such a new segment that it's sort of finding its feet. You know, so their price decline has been a few % over this year.
Is that the only sector with price decline, or have there been others?
No, there's been like off-plan has... So this is where it gets a bit tricky. Actually, across the market, you've seen a 2% dip in prices. However, the main driving force in that reduction of prices has been the composition of the market. So it's the volume of sales in different categories. So previously, you know, the majority of sales were 3 bedrooms and above. So you had higher price points selling in higher volume. Now, this year, we've seen that tilt, about 53% now, tilt towards 1 and 2 bedroom assets. So I mentioned before, volume is about the same in terms of total sale, but people are buying smaller assets. So that's changing the composition of the market. The market now, the median price is coming down because the composition is different, not because of a value loss.
Do you think it's the traveller that's changed? Is there less families coming here? Is Gen Z, you know, solo life kind of more prevalent?
Yeah, we've heard that as a theory or as a potential reason.
Less families? People having less children? I don't know.
Maybe.
Do you think it's a global phenomenon, or do you think it's something...
Looking at the numbers, we don't see that decline in terms of like occupancy. Occupancy is up against all bedroom categories. So 1 to 6 bedrooms, all property assets are up in terms of an occupancy point of view. So it doesn't... The numbers don't necessarily support that idea that groups or families are not travelling. Yes, there definitely has been an increase, I would say, in solo or couple travelling, but then there's also been a really big increase in 1 and 2 bedroom assets coming into the market. So two things can be true at the same time, sort of thing. Previously, the market didn't have this smaller asset segment fully fleshed out. So what we've seen in the last few years is that the market has become more diversified, which is a really good thing because it means that you can have a more budget conscious one bedroom asset available, or you can have your luxury.
It's more robust. There's more market appeal, market spread.
Exactly. You know, and more people find entry points into this market now, which is great. It allows segmentation, it allows, you know, niche sort of professionals to work. I think it's a really good thing.
Price banding, all kinds of stuff.
Yeah, even apartments. I think there's a lot of people with maybe a bit of negative sentiment about apartments, but at the end of the day, it signals maturity because of who is building and the scale of that, but also it signals diversity. And I think if you want the market to grow and mature, you need these sort of things to happen. Coming back to pricing, yes, the market from a macro level has shifted, but it's a compositional shift that's taken place. Where we see, I guess, value loss is in things like apartments. I would say that is more so about the apartments finding their feet in terms of, okay, it's such a rapid growth in that one particular segment. They were kind of making up pricing. There was nothing to go off before. So it was like, okay, if I can sell it for 200, I will, but what is the market really going to pay for it? So that has sort of seen some loss, and also the off-plan segment of the market for, you know, fairly straightforward reasons. A lot of competition, a lot of need to sell to actually deliver. So and that's where sort of real price mismatches happen. I think also some of the projections for apartments, as we touched on before, I think there's a bit of a mismatch there in what that is. But time will tell. 2026,
what's your guess on micro locations? What's going to be kicking it off next year? Or is it the same as this year?
Look, I think, you know, you will see a consolidation. I think you will see some of the core markets maintain their strength. I think you will see a bit of a back to the sort of basics in a way. I think some of the fringe markets might suffer a little bit.
What will you see as fringe? Is like Sese fringe or?
Yeah, I think markets that don't necessarily have a strong sort of brand reputation in a way. So you could have said that Pererinen was a fringe location a couple of years ago.
Yeah, okay.
But it's built a really strong brand as to what that location is. You know, it's a bit of a premium, cool market.
When somebody talks about Canggu now, it's usually Canggu, Pererinen.
Exactly. Yeah. You know, so I think in Bukit, especially some of these, and don't get me wrong, some of the beaches and locations there are absolutely beautiful, but the serviceability and the location of those are just a little bit too far off. You know, when you start getting around to like Melasti and a little bit further.
For me, Melasti would be fringe.
Yeah.
And there's a lot of development going on there.
It's beautiful, and the potential of it as a location is fantastic. But real estate is a long lead time industry. It doesn't just pop up in a year. So if you have a long-term vision, absolutely, you know, you can really get in ahead of the market there. But if you're expecting to sort of come in and, because again, the fundamental driver of this market is tourism. Tourists are not necessarily going to come and stay in these fringe locations. They're on holiday. They're here for a week. They want to be close to where the amenities are. They want to maybe pop out to a couple of fringe locations on a little trip. So I think that's something that needs to...
I think living in Melasti would be quite... I mean, not living, doing a 5-day or 7-day holiday in Melasti would be quite boring at the moment,
And that's why traditionally down in Bukit, you know, it was a resort market. You went in, you were sat in your resort, and you kind of... You stayed there.
kind of model,
Yeah, and that's why it was popular. That's what that traditional market was. So I think some of those fringe markets might struggle a little bit. I think in terms of opportunities, one thing that we see is actually Sanur is a really interesting market, really undervalued, sits below.
Yeah, some beautiful properties.
Beautiful properties like International Hospital, huge new shopping mall, like great infrastructure. You're not having anyone repave the roads over there. They're already sort of done. Like, okay, it's a little bit in terms of brand reputation, a little bit of an older crowd, a little bit.
Got a fuddy-duddy kind of family vibes, but it's great, you know.
Yeah, and it's very accessible to get to other locations. Whereas if you're in, you know, Canggu, you're kind of
stuck,
landlocked a little bit. So there's actually a little bit of, I would say, undiscovered
so
value.
Your call for 26 is Sanur.
Yeah, and the supply is actually...
Get you to sign this document.
This is not a financial advice. But there's not a huge, supply there. Like the competition is pretty low.
There's not new stuff is not being built much there.
There's a little bit, but comparatively barely anything.
And there's got old beautiful properties and there's old like original joggler.
Like good surf break coming from a non-surfer, but that's what I hear. So I think markets like that, there's a lot of undiscovered value still. But that being said, there's still undiscovered value in everywhere. Perairan, Canggu.
You just got to put in the time.
Got to put in the time. You got to know. You got to ask questions. You got to validate. The information you're given, and
it just takes time.
Do the research. Hopefully, we can shave that time down for
exactly,
you.
Exactly. Get a subscription and shave that time in half, or even a quarter.
Yeah.
Okay, last one. If you had $300,000 right now, cash, what would you buy? Where would you buy? And when?
So 300, I'm probably going to get a 2-bedroom and change. Could maybe squeeze a 3-bedroom. I would probably say I'd actually probably go on what I just said. I'd go and look at Sanur. Probably find myself a good 3-bedroom.
Like an oldish
maybe an older one. Do a bit of a
renovation.
A reno.
Yeah.
Or depending on what my objectives were, I'd probably look at maybe a 2-bedroom in Perairan.
Also already built.
Or something from a developer with a really clear track record, had delivered, projects. You could actually see something you could touch and experience from them.
And leasehold, you're good with, yeah?
It's the easiest entry to the market. I think if you're looking for an easy entry, absolutely. If you are willing to, I guess, go through a little bit more setup and everything, freeholders gives you that longevity, a better upside on the capital appreciation, better exit strategies as well, because you can look at the local market as well.
What percentage of transactions is it? 70, 80?
In terms of transactions, closer to 80%.
So a lot more liquid. What mistakes have you seen this last year? Anything jumped out at you? New investor problems, anything?
I think the mistakes in this market are the same sort of mistakes that people make in any market.
Yeah.
Getting caught up in hype.
FOMO.
FOMO. Not necessarily doing the research. I think... one of the core reasons we started was that Bali actually is it's a really great market. It's one of the best. It's one of the best markets. It's one of the few markets. It's one of the few places you can buy an investment property that you want to go and stay in. Like how many people buy like an investment apartment in a city and be like, oh, I'd like to go and have a holiday there. Like that doesn't exist. And it's such, I guess, a low, like globally speaking, it's a low entry price. So it has a huge upside. It's just there's a little bit, some of the numbers and hype you see in the market, they're saying the right thing. It's just over.
Too many bells and whistles.
There's no need to actually kind of inflate it. There actually is just really good core numbers you can look at. I think that's a more compelling story. I think if you're looking to expand or attract new buyers or new investors into the market, you don't need to tell them this kind of, look at this magical market where people double their money. It's like, well, that doesn't happen, or it happens very rarely. Yeah. But if you look at, hey, this is actually a really solid market. There's growth in the demand side. There are some of the best hotels, restaurants, bars, lifestyle sort of tourist destinations in the world here.
Yeah, if not the best,
you can get a piece of that with this really like strong performance.
Why go and buy in Croydon in London?
Exactly. So I think a lot of people who exist or are operating here, we are obviously part of the market, and sort of we are really well informed about it. I would dare say that the wider sort of community outside of Bali doesn't.
They know nothing.
Yeah. When I talk to people back in Australia about it, they're like, really? That's an opportunity? I didn't... There's no, I guess, advertising of that or kind of outbound positioning of that.
It is true. It's actually very badly handled. It's getting better now, but selling the Bali property market outside of Bali to foreign investors is the only thing that really has gotten traction is all this kind of scams that have happened. Bad news sells. It travels faster than good news. But I think that could be a lot better handled by somebody who can really speak to real foreign markets or buyer markets, high net worth individuals who have some real budget. And I think that could change
Yeah. And I think, you see a lot of the advertising taking place on Instagram. The majority of people who are going to transact a property are not buying it off Instagram. They might be informed or get introduced to the market, but they probably want some reinforcement.
Oh, absolutely.
It's
just a top of funnel thing. I would say 90% of all transactions originated probably on Meta at some point, in that purchasing funnel thing.
Yeah.
Well, actually, I've got some rapid fire questions. Yes or no, 60 seconds.
Can I pass?
Yes, no, or pass. Yes. Is Bali still the best property market in Indonesia at the moment?
Indonesia, yes.
Do foreign investors underestimate Indonesia's regulations?
Yes.
Is traffic the worst part of Bali life?
Yeah.
Do you check property listings every single day?
Well, that's kind of our job, so yeah.
Would you be able to survive 1 week without social media?
I don't have personal social media. So
really?
Yeah.
I see, not doom scrolling at night, going, oh, God, that's great. Congratulations. Do you prefer driving a scooter or a car?
Car.
In Bali?
Yeah.
Wow. You drive a car around?
No, I prefer a car.
Do you generally trust the ROI returns that developers have on their deck?
Occasionally.
You're from Australia, yeah?
Yeah.
Would you ever move back there?
Oh, yeah.
So
Australia's the best country in the world.
Oh, Jesus, I'm not so sure about that. That's another podcast. Will AI replace some real estate agents?
Short term, no. Long term, yes.
Do you think failure is necessary?
Yeah, to a certain extent.
Is REID your biggest project to date?
Yeah.
Do you think that Bali's growth is sustainable long term?
If we look at the actual growth, yes, absolutely.
Cool. All right, done. Thanks so much. Tom from REID. What's your website again?
It's realinfo.id.
Realinfo.id. Check it out. There's free reports, paid subscriptions, paid reports.
Yep.
I mean, if you're in the industry, a developer, you probably already know about you. But if you don't, get some of the reports if you're a buyer or investor. Also super handy to look at.
Yep.
But yeah, thanks for the time. Super informative.
My
I
pleasure.
really appreciate it. And let's do this again next year, yeah?
Yeah. We'll do a review at the end of 26.
Yeah, see how many things you got right. Write it down. All right, thanks so much. Yeah.
Thank you.
See you next time.